Ajit Gupta, who wants to know what is considered as the data and cost of acquisition of segregated portfolios for tax purposes.
Well, the clarity on the tax treatment of segregated portfolios emerged in the finance bill for FY21, and these rules were made applicable from the 1st of April 2020. So talking about the tenure of holding, your date of acquisition, even for a segregated portfolio, would be considered as your original date of investment in a fund. Let's say you invested in a bond fund about 5 years back, and last year, about 1 year back, there was a credit incident because of which the fund had to segregate a certain portion of the portfolio into a segregated portfolio. And now 1 year down the line, let's say the fund has been able to recover that amount which it had to segregate and pay it back to you. So now your tenure of holding for even the segregated portfolio would be considered this entire 5 year duration since the time when you made the original investment in the fund. And therefore, long-term capital gains tax, the beneficial tax treatment which gets you the indexation benefit would apply to this segregated portfolio. Now, when it comes to the calculation of the cost of acquisition, well, your original cost of acquisition of the units of this fund would be bifurcated. It would be split between the main portfolio and the segregated portfolio in the ratio of the NAVs of the main portfolio and the segregated portfolio on the date of segregation. Now, let me explain that with an example. Let's say you have a fund whose prevailing NAV is 95 rupees, out of which rupees 5 in this NAV is contributed by certain bonds which are distressed right now. And the fund company decides to segregate these distressed bonds into a segregated portfolio. So you will end up with two portfolios, one the main portfolio whose NAV would be 90 rupees and a segregated portfolio whose NAV would be these 5 rupees. So the ratio of your main portfolio to the segregated portfolio on the date of segregation is 90:5. And in course of time, when you were to redeem these units, the cost of acquisition, your original cost of acquisition of these units will be bifurcated in this 90:5 ratio to calculate the cost of acquisition of the main portfolio and the segregated portfolio, and accordingly the tax liability will be calculated.